That sounds pretty bad. You got one of the Fed guys, Fed Governor Bowman, adjusts his rate stance, says hikes likely are over, but not ready to cut. Now, one of the reasons why we're getting a frenzy of real estate stuff, and the reason why we got some people suddenly jumping onto the market and developers are now trying to scour and get more plots of land, is because Jerome Powell promises 3 rate cuts this year. Now, we don't exactly know when these rate cuts will be delivered, but in my personal opinion, probably one in March, one in the summertime, and maybe the last one around late fall or early winter. That's my guess. And rate cuts will drastically decrease the interest rates for these houses. I mean, 15-year, 30-year mortgages are all incredibly pricey. So why can't we have some cheaper loans and cheaper mortgages so people could buy these homes? Because developers right now are building like crazy. But now suddenly, Bowman comes out and says, okay, we're not going to hike up rates anymore. That's a guaranteed thing right now. But what about cutting rates? Probably not. And the reason why is people are saying that interest rates are not ready to be cut because of inflation. If you look at the European inflation sector, December inflation over there actually went up, right? Inflation in some of the biggest first world economies are going up in December and January. And people are a little bit scared that now we could be seeing the U.S. inflation going up in January and February. And if it goes up, kiss your Fed cuts goodbye. And this is the first time any Fed member has came out and said to not cut rates. This is a really big article here, and this is what could tank the stock market and the housing market. Because now with these high interest rates, we're seeing a huge bust in terms of big real estate purchases. I mean, can you imagine, 10 years ago you told somebody that this building in Chicago's Loop area will sell for $4 million? They'd probably slap you. But now, this building actually sold for a negative 90% loss. And they sold for $4 million. You heard that right. This massive 12-story building is selling for just $4 million, which is just the price of like an average mansion. So the mere fact that a lot of these real estate prices are tanking because of high interest rates is a serious business, and small banks just can't take the heat anymore. New home construction jumps, raising hopes for a better housing market. Yes, we're getting a lot of houses being built right now, but are people buying? Absolutely not. Why is that? Well, a lot of people are being laid off right now. Now, I get it, unemployment numbers are about the same. In fact, you can even argue that certain cities, you got unemployment going down. And the reason why I'm really worried about this is because if you go on Zillow, what do you see? Oh, wow, every house is like at least $300,000 to $500,000. Well, guess what? Jobs that will allow you to buy these homes that are above $300,000, $400,000, $500,000 are very rare. In fact, if you want to get a $500,000 house, you should be at least making like $150,000 household income, in my personal opinion. And I think a lot of experts will also agree on that, like bare minimum. Now, we have a lot of jobs in the minimum wage department, like 15 an hour and below. They're everywhere. But jobs that are like 80, 90, 6 figures and up, those jobs are very difficult to find. Just look at the tech and finance sector. Those are the big sectors that pay the fattest bonuses and cash. They're pretty much laying off workers like crazy. And if you look into what's happening here, you got a bunch of these homes being built, and all these developers are just sitting right there, very happy. They're waiting for spring. They're waiting for summer to come along when people paid their IRS taxes, and when the weather is better and nicer and warmer, they want to start seeing these homes being sold. But surprise, feds are like, hold on a second. Let's not cut rates just yet. Let's hold these rates for the rest of this year. If this is true, we could be seeing a huge decline in real estate prices, and especially businesses are already closing down. And the reason why so many high-paying jobs are being cut is because companies aren't making as much money anymore. Because when loans are very expensive, a lot of companies, their revenues aren't high. And when the revenues are not high, they start cutting workers. And the reason why a lot of these companies like Charles Schwab is cutting so much office space and employees is to save $500 million in preparation for something crazy as this in 2024. 2024, everyone's like, oh, rate cuts, we're good. We're finally out of this whole scenario. But now for the first time, one of the Fed members is now doubting this decision. which makes this whole scenario very scary. Thanks for watching, guys, and check out the private Discord server, Patreon link below, and we're making some pretty hot and juicy trades, and our profits are actually pretty good. So check us out, trade with us, make some money with us, and it's a 7-day free trial too, so it's pretty awesome.